And welcome back to Valley Showcase. With me now is Andy Stadler with Stadler Tax and Accounting. And Andy, I know you've got to be busy right now. The days are counting down to that April 15th deadline.
That's right, 6 days, and it's getting a little busy. So
I want to get right to some of those things that folks may be concerned about as the deadline's near. If they haven't prepared their taxes yet, or if they're in that process. What are some things that they should be concerned about at this point?
Well, I guess let's start with the very basic things. Look to get all your W-2s together, your 1099s, look for your mortgage interest statements, your property tax you paid. Start just gathering all that documentation together. That's what you're going to need to start to do your tax return. And then from there, if you just don't have the time, you're just not going to be able to get your tax return done. You don't have the tax documents, or you're missing something, file an extension. It's real important to at least file that extension. If you don't file the extension, then the IRS will charge a fine, and the fine is going to be generally 25% of the amount you owe.
Wow.
So it can be pretty steep.
Pretty costly.
So, exactly. So if you just cannot get your tax work done, file extension. You can come by any of the Stadler offices. We will do your extension for you for free. We won't charge anything at all. Just stop in, and it takes about 10 minutes to do it, and we'll do it for free.
And tell me more about the extension, because when you file an extension, you don't send any money in at that time. Is that correct?
Well, if you do owe the IRS or think you may owe the IRS does expect a payment. However, if you don't have any funds at that time to pay, at least go ahead and file the extension. But again, if you expect to owe, you really should send in some funds with that extension time. What the extension does, it gives you an additional amount of time to file the tax return. It doesn't change your due date. Your due date is still April the 15th, but it gives you an additional amount of time to actually send in the paperwork. If you end up owing the IRS, the penalties and interest start from the due date, from April the 15th for not.
So whenever you do actually file. Okay. How long is that extension? Is it vary, or is there another deadline that is then put on you for that?
It gives you an automatic extension till October the 15th. So you get 6 more months, gives plenty more time to get your paperwork in to the IRS.
But you have to remember, you've got some penalties that are being tacked on from that point?
That's right. After 60 days, if you ended up owing the IRS, and after 60 days, the amount you owe, the IRS penalty could be as much as 100% of the penalty, or the amount that you owed them. So if you owe them $200, the penalty could be $400 altogether to end up owing them.
What if you don't think you owe? Maybe you think that you're in good shape, but you just don't have all the paperwork together or the time maybe to get done by the 15th. Are you safe then to going ahead and filing that extension?
Exactly. Go ahead and file the extension. That gives you're filing it on time then, and you won't be charged with the penalty for not filing on time. Go ahead and file the extension, at least to get that part in. It's real important to get that paperwork in. If you just simply cannot get your forms done, it's extremely important to file the extension.
To avoid those penalties.
Exactly.
Now, if you don't owe and you do the extension process, obviously the downside of that is you're just prolonging maybe getting any kind of refund you're owed back. Is that correct?
That is correct. If you got a refund coming back, you will get it. And after April 15th, the IRS will actually pay you interest.
They do? Okay.
On that. So you do start getting interest after April 15th.
Okay, makes sense. Take us through some of the other things that folks may be concerned about right now. I know people get antsy. It's almost like the last minute before Christmas, and you're like, I don't have all my shopping done. I'm sure folks are getting concerned and panic starting to set in. Do you have some tips for them to kind of ease the stress a little? Yeah,
I do. There's going to be some things you can take a look at. Look at your taxes, your tax credits. Look at your earned income tax credit, your working tax credits, a brand new credit this year. A family can get up to $800 of working tax credit, and that's a new one. That's called a Schedule M, so make sure you go through and do that. Another one is a child tax credit. If you have a child that you're claiming under the age of 16 or younger, you can get an additional $1,000 per child. And then, I get a lot of questions during this time of year as to my filing status. What exactly is my filing status? Tax law looks at December 31st. If you are married on that day, then you need to do a married filing joint return or married filing separate. If you're single that day, then you'll either do a single return or perhaps head of household if you have children you can claim. So take a look at those are some of the quick things, but believe me, there's many more.
Sure.
When it comes to tax law.
I know folks also maybe get a little sense of panic when they hear the word audit. They're getting audited. And I understand in the news there's been a lot of talk that the IRS has actually upped the amount of folks that are out there doing those audits. Take us through that, what folks maybe need to concern themselves with concerning an audit.
The IRS has hired 2,000 new auditors. Their audits are up by over 3,000% over last year. And I'm not saying that to scare you, I'm just saying that so you be aware that the IRS is looking at things in a more critical way. With the budget where it's at, Congress has charged the IRS to collect funds, and they are looking to collect all the money they can get. If you're a small business owner, make sure you look through all of your income, all your deductions, make sure you have all those receipts. And no kidding the receipts. You can't have just a handwritten copy or notepad or something like that. You got to have a receipt. That's real proof that you got business expenses.
I know people hear the word itemized and they may not understand fully what that is, and I know that comes up not only in audits but in other issues related to tax.
Yeah.
Tell us a little bit about that.
Itemized deduction's been around for many years, or the long form is the old nickname for it. Basically, it's where a person's writing off their mortgage interest, their property tax, their charitable contributions, writing off here in Indiana, their auto excise tax, the amount you pay for your license plates. Charitable contributions, make sure you make donations to charities that are not-for-profit organizations like churches, United Way, the Girl Scouts, the Boy Scouts, different folks that or different events of that magnitude.
I know there's a lot of tax credits that are available to folks, and if they obviously are trying to prepare taxes on their own, they may overlook some of these things. Another good reason to come to someone like yourself to make sure you're taking full advantage of it. But tell us about some of those tax credits, and some of those people may be confused if they've expired yet or when they're going to expire. So what are some of those that you need to look for?
Some of the tax credits, well, a couple of the big ones. One was just discussed here, the first-time home buyer tax credit. That one's set to expire. You have to sign a purchase agreement by April the 30th. If you're a first-time home tax buyer, now what that means, a first time is when you have not owned a home in the last 3 years, then you're considered a first-time home buyer, and you can get up to $8,000 back. If you're a brand new credit for homeowners, it's called a prior homeowner, you can get up to $6,500 back. But both those credits expire April 30th. A couple of others that are real popular and they've even been enhanced is some college tax credits. If you're attending a college or you have a child attending a college, you can get up to $3,600 back. So be sure to go through. You get your tuition and books. You get to add that together and you get up to $3,600 back.
So there's some really good benefits out there if you take advantage of it, and make sure you don't miss those on your forms. Take me through the process of someone deciding whether or not doing it themselves versus taking their taxes to professionals such as yourself at Stadler Tax Accounting. What are the pros and cons, and why would they choose going to professional?
Sure. As a tax professional, we know the tax law. This is our job. This is our full-time job. We're licensed to do this. So you really want to be sure to go in and ask for a licensed tax professional, and that's the reason why you want to come and see us.
All right, and you're available, as you said, you can do those extensions for free.
We'll do extensions for free. Stop in any of our offices and we'll do them for free.
All right, your contact information is on the screen. You can visit them online also at stadlertax.com. More of Valley Showcase to come. Stay tuned.